This is in Lesson 12, Exercise 25. This is for Ronald Davis. And Ronald Davis had an early retirement distribution. He's under 59 and a half and took a distribution from an IRA. And so this exercise is to show what happens when someone takes a distribution prior to the time they're 59 and a half. So we're going to go into do a search, and there it is, Davis. And Ronald Davis return comes up. I'm going to enter his return. And we're going to need to enter the 1099-R form that we've been provided in Exercise 25. It's on page 58 of the self-study document. So here's the federal section. We know it's a retirement. And I could go over here directly to Form 1099-R. Again, I could type it in up here. This time I'll go in and just say begin. I want to add a 1099-R. What's the payer information? Payer information looks like 35-223-4567. It's the Federal Credit Union. As the address is populated for us. What's the gross distribution in box 1? 42.5636. So it rounds down. So 42.56. Taxable amount. Well, the taxable amount is in box 2, 42.52. It says tax amount not determined in 2B. That box is checked. Federal withheld is $425. Next box is checked that has information in it is box 7. It is a 1 for the early distribution, and the IRA SEP simple box is checked. So we're going to check that as well. There's nothing else in here for the state or anything else on the form, so we're finished with the form. Everything is done. It's not a rollover of disability. So we can now say continue to save. And when we say continue to save, up pops a page, and it says 1099-R, distribution penalty. And it says that you're reporting your distribution, and it asks, what type of plan did you receive this distribution from? One must be selected. Well, this is from a retirement plan. It's from an IRA, so we're going to select that. Down here at the bottom, this paragraph says the indicated part of it meets one of the exceptions to the penalty. You wish to exclude the qualifying party distribution. Be sure to enter the appropriate amount and reason on Form 5329. Maybe he had a valid reason for taking this out, being before 59 and a half. Let's go see what those reasons are. So we're going to say continue here. Did you make it for a qualified disaster? The answer is no. And now we can go up and look for Form 5329. I can just key in 5329, and there it is. I go to the form. It opens up. It belongs to the taxpayer, Ronald Davis. It's a simple, it doesn't have anything to do with that. Oh, it's an early distributions that aren't subject to 10% tax. If we believe that any of this distribution of $4,256 should be excluded from the tax. Now, normal income tax is going to be charged against this. The question here is, should there be an additional 10% tax placed on it because it was an early distribution? Well, right underneath it, it shows the reasons for exemptions. And we can open this up, drop down, things like total and permanent disability, medical expenses, higher education purposes, first home purchase. There's a lot of different reasons for the exemption. As we go through here, what we find is that, well, Ronald Davis didn't have any real reason that would provide him with an exemption. So there's nothing we can do. He is subject to the 10% penalty. We would just leave this, cancel this, and leave it. And that's it. We've input his early distribution, and he's going to be taxed on it income-wise and receive a 10% penalty on it. That's the end of exercise 25.